We're back live in studio with Samuel Zurzer in the business headquarters of Radio Shalom 1650 AM in Montreal, Canada, with the Money and Business Show. Samuel Zurzer is a consultant with TE Mirador, which has been providing individuals, families, businesses, and employees with truly objective financial advice and education since 1972. You can visit them at www.temirador.com. You have questions about your personal finances? You need advice in making sound financial decisions? Samuel and his guests are ready to take your call at 514-738-4100, extension 200. And now, back to the Money and Business Show.
Maurice Cousin from National Bank Financial. We're at the halfway point of our show with our guest, Mr. David Gurwitz, who's coming to us live from New York. He's Managing Director of Charles Nenner Research. 2 days in a row, he's on the Canadian Airwaves. Yesterday with BNN, and today with us. I got a quick question here for David. What position did you try out on the Expos?
I tried out at catcher.
Whoa. You were a catcher. Well, you must have a good arm.
I had a good arm, and I'll tell you a quick story. This was at Kutcher Sports Academy in the Catskills, and I was 16, and the first 5 guys struck out on 15 pitches.
So
the pitcher was throwing 100-mile-an-hour fastballs, and I got up to hit, and it was at the camp I was attending, so there were hundreds of people that screaming for me. And the first pitch I didn't even see, strike one. And I walked off saying to myself, I didn't know a human being could throw a ball so fast. Right? I get back up, same thing, strike 2. I didn't see the pitch. I couldn't even get the bat off my shoulder, and I was a pretty good hitter. And I'm saying to myself, I can't believe this. The next pitch, he actually missed the side, so I got the first ball off him, right? Everyone's screaming. Next one, I said, as soon as he throws the ball, I'm going to close my eyes and stick the bat out. I have to get at least off my shoulder. If I'm going to strike out, I might as well go out swinging. And I raised the bat. I figured the ball's rising. I closed my eyes. I put the bat out. He wound up, he threw the pitch, and the ball hit the bat and flew over the right fielder's head. I was so stunned. I never saw the pitch, and I ran around to third base. It looked like I was taking him the whole way. I planned it. He was stunned because he was striking everybody out, but that was my tryout with the Montreal Expos. That was it. That was the highlight of my baseball.
Would we know the name of the pitcher?
His name was Louis Brown. He wound up going to Harvard and was a star basketball player there.
Oh. So you must have been somewhere behind Gary Carter on the depth chart.
I was a little behind Gary Carter.
Yeah. What year was that, David?
That was 1971.
Oh, right behind
71. Do you guys know who our catcher
John
was?
Bateman. John Bateman, probably.
Bateman, yeah, I remember.
It was Ron Brand.
Well, Ron Brand was backup, but Bateman was the regular. Brand could play 8 positions.
Are you sure it's not John Boccabella, or is that
Boccabella is a little later, but Bateman was before there, number 2.
Yeah. That's the whole thing, how Montreal got baseball. It was kind of funny, you know.
Well, we lost it. Sucked.
Charles Bronfman brought it here.
Story.
Everybody's talking about bringing baseball here, bring baseball. When it came down to sign,
we'll get
Bronfman's the only one who was ready to pay and get him here.
I'm telling you, we're going to get it back. But, David, next year you have been forecasting, or the Charles Nenner Research forecasting, a decline in the U.S. economy. When will it begin?
That's a good question. I'm not 100% sure, because we haven't done the economic indicators in a while, but I'd like to give you all the 5 categories: stocks, bonds, commodities, currencies, and grains, if I may, and that might answer your question.
Okay.
So stocks, again, other than the harder stocks I mentioned before, for the hard assets and the grain assets, are down, even though there will be a rally somewhat into the first quarter, because the bottom, there's a sell signal to the middle of December. Gold, again, will be up. He said wait till the end of the year. He took everyone out at the beginning of this year, and there should be a rally to 2,500, and silver heading towards its high in the high 40s. Okay. Bonds, which have been on a 30-year rally, right? If you think about it, rates were 18% in 1980, and they're low now. So if you bought bonds 30 years ago and did nothing, you had a gain all the time, because rates came down, bond prices went up. It's going to go the other way for the next 30 years. Not yet. It's going to probably kick in about 3-4 months into the next year. But basically, bonds are going to be down more or less for the next 3 decades. Just like they've been up for the last 3 decades, and they were down the 3 decades before that, because 1950 rates were low.
So obviously,
is PIMCO a client of yours by any chance?
PIMCO, I'm not allowed to say.
Oh, okay.
So obviously, if the bonds are going down, I mean, interest rates are going up, right?
Well, that's right. That's how it works.
That's how it works.
Now, that's a 60-year cycle in rates. Remember, high in 1980, low in 1950. You know, people forget there was a new technology invented in 1950 you might have heard of called television. The biggest advertiser in TV, U.S. government, 1951, selling 2.5% savings bonds. The rates were low. 1920, they were high. 1890, they were low. 1860, they were high. Civil War. So anyone wants to write in, I'll send the charts out so they'll see and they can start getting the research as a sample.
Yeah, how did they get a hold of you?
CharlesNenner.com, CharlesNenner.com. There's a big button that says
Send.
Click here and sign in or send in information, write something that I heard it on the show, and we'll start sending you the research as a sample. So anyway, that's the bond picture going forward. Now keep in mind, he wanted everybody to buy 10-year 4% several years ago. Everyone thought, how much lower could it go? He was right. They were wrong. We're now short TBT puts. What's TBT? You guys know, but maybe listeners don't. That's an inverse ETF for bonds, meaning
bonds,
short
right.
bonds.
The T-bills.
So the bet for the next 30 years is to own at the right time TBT, because that's going to go up as bond prices go down as rates go up.
These are the long-term bonds you're talking about.
Long-term.
Right. They're 30 years?
Yes.
30
I think
years.
TBT is 20 years,
20
but
years.
that's the 30 years. So that's the bond picture. So if you have stocks down for many years to the end of the decade and bonds down for longer, gold is up, silver's up, hard assets are up, grains are up. The U.S. dollar is topping beginning in 2014. The Canadian will be strong, actually. Canada looks like it's going to do okay even during the rough times coming, by the way, just to make you guys feel better. But if it were different, I'd tell you the truth anyway. It just happens to be a better story.
Okay, it's good to know that.
But Canada looks like it will be decent going forward, given its water resources. Then you start to say, what's the reason? We all know the reasons. You guys know better than I, but cycles seem to support all that. But it's not going to be such a pretty picture in the world.
And forget about our financial system, which is solid. This has to do with cycles. This has nothing to do with our financial system, the banks. The S&P 500, I know we just almost touched the 200-day moving average.
Right.
Well, what is your target for the end? I know you said the markets will be coming off till the middle of December and then maybe going up a little bit. What is your target till the end of the year?
We don't have it yet. Good question. We had the target of 1449 and 1460 on the upside.
On the upside, but the downside?
It reached it. We don't have a downside target yet.
Okay, because
the computer has to spit it out, and Charles is brutally honest, as I like to think I am. He writes what he sees. If he doesn't see it, he says, I don't have a target yet, but we're heading down. Like crude, which I didn't really discuss other than
oil.
The bottom is the first quarter, but he has a target of 70. Right, and Schlumberger is bottoming in the first quarter, and Exxon's bottoming in the first quarter. So he lines up the underlying commodity, and then the stocks related to the commodity, and then the ETFs related to the stocks related to the commodity. So they all line up. He feels pretty comfortable. Sherlock Holmes says, this might mean something, you know, which, if you think about it, makes sense, but he is a doctor, so he's pretty scientific. So it looks like a big bottom in the first quarter in oil-related investment vehicles.
What about inflation? Has been in check for a little while. Do you see anything changing from there?
Long-term, definitely inflation, but he did say that we wouldn't have it the last several years, which in most things is not. Well, stocks have had inflation, I guess, for the last 4 years. They doubled, right, since 2009, when he went long, by the way. He took everyone out summer 2008 of the stock market before that crazy time. I'll never forget, everybody was so angry at him during the summer of 2008, about 2 months before the craziness started. He said, it looks good, it looks fine, I want everybody out. It's like everyone out of the pool on a hot day. Why can't I go in? I don't know, I don't like what I see.
Just get out.
And then he went long in the beginning of 2009, and in the end of 2008, he said the economy would bottom in the beginning of 2009, which it did. He doesn't know why. He just saw that it did. So I want to answer your question about the economy. So the economy, quote-unquote, is going to not be good overall for the next, quite a few years. There will be moments of of strength. There'll be moments, quarters of quote-unquote unemployment gains or employment gains, but overall, things are going to be down.
So, and David, are we in a bear market overall, in the overall scheme of things?
Yes. Well, not for the hard assets and the commodities.
Stocks.
But for stocks, yeah. Over the next, he said the Dow would go to 5,000. He said it several years ago. He actually had said it would be more or less around this time, and he pushed it out. But he hasn't changed his view that we're going to really going to go down there.
He said this on this show when Charles came on. It was actually a couple of years ago. He said the Dow will go to 5,000.
He still feels that way.
Why? What, 5,000?
Cycles and targets. That's the one. It's funny. The answer's always the same.
Yeah, I know. I know
you're looking for some greater chachma, right?
Yeah, greater chachma. Exactly.
Right.
But
right. Copper mirrors the economy, right?
Yes.
Copper's down, which he sees, the economy overall will be down. Now, we call copper Dr. Copper. Everybody knows that. Do we know why copper is going down? No. Cycles are going down. It's very hard emotionally for people to accept this because we all spend all day doing what we want. If you really think about it, a rich guy always feels he can do what he wants, but even all day you get up, you go to Starbucks, you press your iPhone or your BlackBerry, which, by the way, he called the top in BlackBerry. He called it in the high 70s.
So where's BlackBerry going? Just for 1 minute left.
BlackBerry is sideways, actually, for a year or so, I think, and then I'm not sure of RIM. We're not talking BlackBerry.
Yeah, RIM. Sorry, yes.
I don't know longer term where he's seen it. We haven't discussed it.
Okay. And when would you see rates going up? You see rates going up, and obviously you must think it's pretty soon because you already made a move on it. So you expect
rates are up for the next 30 years. However, what he's saying on bonds, bond prices are down to the end of the year, which in effect is his position. He's short TBT puts. And then he actually sees a bounce in bonds at the beginning of the year. And then after that, another move down in bond prices in the beginning of rates going up again.
And he doesn't make any projections as to unemployment, does he?
Oh, sure we do. Oh, yeah.
Housing.
We haven't done one in a while.
You know what, David? We're just going to go to a commercial. We're going to be talking about unemployment, housing. There's a few more questions.
Elliott Wave and Fibonacci.
Yeah. I just hope you said mincha. Did you say mincha before?
Yes. Thank you.
Okay. Good. My name is. we think of everybody here at the.
Right. It's great.
Right. It's.
Well, anyway. You're Canadians. You're considerate people, and of course. Where you guys are, there's no politics. That's what I see.
Right.
Oh, yeah, right. That's it. No politics.
No politics in Quebec. That's what I really like about it.
Yes, there's no politics.
No politics.
Except for the fleur-de-lis and the, what do you call it? In the,
he doesn't know about that.
Oh, he doesn't know that? Okay. Well, anyway.
No.
It's better off this way.
Yeah, you know what? It's better off, exactly. My name is Samuel Zerzer. I'm with David Gurwitz, sitting in for the Charles Nenner